Welcome, welcome, welcome. We are back. It is the #1 trading community in the world, maybe not by size, but by quality, the free trading movement. I was going to take off my hat because I'm wearing the FTM hat, but I'm wearing it for a reason, okay? I didn't do my hair today, so I can't take it off, but I'm wearing it, okay? You just don't see the side with the logo on it. But we are back. We got FOMC tomorrow. And yeah, let me turn down this music a little bit. It's quite loud. We're going to talk all about what's going on in the markets. We've had a very low amount of volatility in the past couple of weeks, and we could finally be seeing a change in that. So we're going to be talking about that. What's up, Frank, Danny, Dave, Kaleidoscope in the chat? Anyone joining in, make sure to say what's up. Kaleidoscope, what's up, AK? It says, anyone knows the name of this music before this one? Was it the intro song? This? I don't know. It's just called Lo-Fi, L-O-F-I, Fruits. Like fruit, like a banana. Lo-Fi Fruits music on Spotify. I just found it pretty chill for the stream. And yeah, it's been a long day. Woke up, started trading, made 70% on puts. If anybody wants to go see what I did, it's literally a 20-minute video. It's already on my channel. Just go to the live section. It's the last live stream I did from this morning. Literally 20 minutes. Take out 20 minutes after the stream. After this stream is over to go watch that. It's a really good education because I actually gave my thought process as to why I was entering puts at the open. I'm sure you saw a lot of people take puts later on in the day, made some good gains. But to get into puts at the open, I had a very different game plan than what I saw most other people. Most other people were just saying it was a downtrending day. You weren't making any reversals until we got that wedge in the afternoon, and then we did bounce up. I will be talking about that. But I had a really good strategy for the open. And it played out in 20 minutes, and I was done for the day. Didn't trade at all. All I did apart from that was add a little bit to my Fisker calls, which are bleeding right now. But I was still green on the day thanks to those SPX puts I took. So tomorrow we have FOMC. We've had a 2-day meeting now. Tomorrow I believe is the second one. And we're going to see what Mr. Powell thinks. There really hasn't been a lot of stuff going on in the market. There just has been a dry amount of earnings, news. We've had a few IPOs. I think that's been like the main thing that's kind of been getting attention recently. So tomorrow's going to be a big day. The wide expectation, I believe, from what I'm seeing, is no change in the rates. Then a slightly higher expectation. Well, all right. The main expectation is no change in the rates, from my understanding, and then a smaller expectation of the rates being hiked another 25 basis points, and then a very small expectation of us actually cutting rates like right now and reversing the process of what's been going on, I believe, since last March. So we will see. There's a lot of factors at play here. I talked about a lot of them last night. The US 10-year really breaking out over here. It's been a very big move lately. Haven't seen any gas prices because I'm living in New York City now, but I'm sure they're crazy. Oil has been going insane. We're going to talk about that. There's actually a bearish formation showing up for oil right now on the crude oil chart. I know olive oil is at all-time highs though. So there's a lot of different factors taking place here across the board. We have some interesting moves today. We're going to break it all down. Let's get started with the overall markets. Make sure to hit the like button, hit the subscribe button if you're new to the channel. Nothing really changed for crypto, so we're going to skip over that tonight, but you've got the potential cup and handle breakout on the US 10-year ahead of the FOMC tomorrow. I was a little bit late to the stream tonight because I was just sitting in a class for 2.5 hours talking about bonds. It's a fixed income class I'm taking. And this is just unprecedented. Pretty sure both of my professors today were talking about how we've never seen these type of conditions in the economy ever. Like, we're living in a very special time. So yeah, US 10-year going for the cup and handle breakout right now. The VIX still has that potential double bottom look to it. I wonder if it can get it back above this longer term trend line over here. We will see. Of course, the big name, crude oil. Yes, it's been rallying a lot, but there are some bearish variables starting to show. The simplest one is that you got a shooting star candle. Is that a shooting star hanging man? I don't want to be saying it the wrong way. I believe that's, yeah, shooting star candle. Give me 1 second, sorry. Nose is running a little bit. So yeah, shooting star candle on the daily for crude oil with classic bearish divergence on the MACD and an overbought RSI. It's sitting at 76 right now, and all this is taking place. Okay, two things I want to mention. All this is taking place at this level. Now, what is this level? A major resistance. You topped out here 3 times at the end of last year on crude oil. If we zoom out and we use fibs, you're also at your golden pocket. All right, you're entering that 50% to 61% Fibonacci area. This right here is your golden pocket. That's the most common reversal area for assets when they're changing trend. Okay, so this is a pretty interesting area for a pullback in oil. Something I will be keeping an eye on. Let's see. Let's take a look at an oil ETF just for fun. Let's see if I can find a decent one. United States Oil Fund. I don't know what this does. Let's do OIH. All right, let's try this one. Look at this. Like, you're getting bearish technicals on oil ETFs as well. This is tradable. I'm not saying to trade it. It's still a mega uptrend in the last few months, but classic bearish divergence on both oscillators. If you want to learn about divergence, my free course is in the description. You got classic bearish divergence on both the oscillators. A major bearish engulfing candle today. You pretty much bearishly engulfed the last week of price action, or almost 2 weeks of price action, just today alone. We zoom out over here. There's probably some more stuff in play here. All right, you've probably got this trend line. Yep, look at that. Look how many times you keep rejecting this trend line. It's a rising wedge starting to form when you're at the top of it. It's going against the trend in the euphoria in oil right now, but if you have the, try to keep it PG here, if you have the apples to take that short, you got classic bearish divergence, a rising wedge, bearish engulfing candle. It's pretty close to historical resistance point at 371 on this ETF. So when the market's weird like this, you gotta get a little bit funky, in my opinion. You have to look at different ways to make profit. Something is always moving. It doesn't always have to be you trading. I know everybody likes to trade their own names, whether it's Tesla, Apple, Microsoft, just a SPY, whatever it is. If you watch me morning trade, it's mainly just S&P and Qs. But if you look to other parts of the market, like, oil is not necessarily a stock, it's a commodity, but you can trade funds or stocks related to it, and the technicals work just the same. And this is something I've definitely learned over the past few months. I've looked into a lot of international markets. On Twitter today, I just shared my mega watch list. If you go to the second page of that, it's on my Twitter page, @ChampionVibe. If you go to the second page of the mega watch list I shared today, I have a whole entire list of stocks from around the world. There's a lot of things you can trade out there, all right? So let's move into the overall markets heading into FOMC tomorrow. Same thing I talked about last night on the stream. At the lows of the day, you were testing a breakdown of this triangle actually, but you did rally up towards the close. And that's why when I got out of my puts 20 minutes into the day, sure, I could have held them for longer. But again, well, today was one of the larger moves we saw, especially in the morning. We keep getting flat closes in the market. The only day we really didn't get a flat close was Friday. We were down 1.5% on the SPY. But if we look at all of these days over here, they were very flat closes. Okay, you had like 2 days over here at the end of last week that weren't. Yesterday was a flat close. Today was down a little bit, but relatively a flat close. Okay, we're not getting, apart from the last 2 days of last week, we're not getting big candles. We might be getting some wicks on some of these candles, but we're not getting big percent changes at the close. That's why, especially when we get some sort of a move that I'm trading in the morning, lately I've been taking profits a lot quicker. I'm not looking for an all-day type of move. I'm sure a lot of people were looking for the markets to keep selling off the whole day. They got into puts in the morning and they kind of just looked away, hoping that the puts would just be going up and up and up all day. And then what happens? You got a reversal. There's this equilibrium in the market that is really making the needle stable for the close right now. What could change that? FOMC tomorrow. All right, let's take a look. The markets are discounting a 29% chance that the FOMC will raise the funds rate by 25 basis points at the next FOMC meeting that ends on the 1st of November, okay? So, let's see, a 15% chance and a 15% chance for that 25 basis point rate hike at the following meeting that ends on December 13th, okay? So, The markets are expecting the FOMC to maintain its hawkish bias and keep in the possibility of one more rate hike later this year. So the big thing tomorrow, I also was looking at a CNBC article that was showing some other statistics. According to CNBC, there is virtually no chance the US Central Bank will choose to raise its benchmark borrowing rate when its two-day meeting concludes on Wednesday. All right. Markets are pricing in just a 1% chance of what will be the 12th hike since March 2022. So a pause is what most people are looking at. But the main thing to look out for is what they allude to doing next. Not necessarily what they're doing tomorrow. Of course, if they do surprise tomorrow, that could affect the market in either direction. But what they allude to, the words that come out of Powell's mouth, the verbiage is going to be very, very key. All right. So let's talk about the levels heading into tomorrow. I don't really care about the first 2 days of price action this week. You had flat days, you had lower volume than Friday, lower volume than most of last week. Yesterday and today, forget it. Where I still feel, we're pretty much at the same price. Imagine that these two candles didn't even happen. We're going to think outside the book a little bit over here. We're still here. We're still where we dropped down to on Friday. We're still at the same prices. We went even lower at one point today. We have just seen a sell-off in the market over the past few days, discounting the nothing burger of yesterday and today. We're pulling back into this FOMC. We have a bearish triangle, we have a hidden bearish wedge. The technicals are set up to the bearish side. They are. Overall, on higher time frames, you got the same thing on the QQQ where you technically already broke down, and this could simply just be looked at as a final rally before a further sell-off. Okay, that was what you kind of got in the last couple hours of today. You went down 2% on the S&P really quickly in a few days, got a little bit of a rally in the afternoon. It's more than anything, in my opinion, setting up a better point for bears, again, to take shorts with the sell-off. Technicals are still showing lower prices, in my opinion. Okay. Tomorrow, in terms of a pause, that's what's widely expected. Let's say we likely get that. Shouldn't really change much. What you're probably going to see the market moving with after 2 p.m. EST is just comments made overall. Different comments about different parts of the economy, some stuff alluding to the next couple of FOMC meetings. That's what you're going to see move the market intraday. So I do think we're going to get some volatility post 2 p.m. EST, but I do not think that it's going to change the course of what's trending right now. The only way that I think we reverse these bearish technicals setting up in the market is if we get an insanely good FOMC. In my opinion, that would mean, let's go down to a little bit of a lower time frame. Right? In my opinion, that would mean getting back up. SPY is probably a better way to look at it. Getting back up and above Friday open. Okay, Friday's open was 447.12. It's not a crazy move, especially on an FOMC day. It's a 1% move. If we can get that 1% move higher, and if we do rally off the open tomorrow, because we have a little bit of a step I'm going to talk about in a second, let's say we rally off the open and we actually keep rallying after the FOMC, that's the thing that sets up the reversal, right? But I don't see a scenario in which we get a bad reaction to FOMC, we go lower, and then we just completely reverse back up. I know a lot of people play, and I might be biting my tongue here tomorrow, depending on what happens, but I know a lot of people play, inverse the original move of the FOMC and everything like that. I think all that you need for this bearishness to continue and really set up quick downside price action is what most people are already expecting for the FOMC. So the only savior of that, in my opinion, is an insane blowout in reaction to the FOMC. Unless we get that 1% spike up, we're testing Friday's open. Like, set an alert if you want at Friday's open at 447. Once we start testing out on the SPY, it just adds more fuel, more liquidity for the bears. And I'm not trying to sound like an ultra bear. I don't have any puts right now. I'm actually in calls right now on Fisker. Not swinging any puts. I don't know what I'm going to trade at the open. We will see. That's what's setting up over here. Now, pre-FOMC in the morning, let's talk about the morning setup. Tomorrow morning, I'm going to be doing live trading for everyone. I'm going to open up to the whole Discord tomorrow morning instead of just premium because it's an FOMC day. I'll probably be in Twitter Spaces too. I've been enjoying that. Let's talk about the setup going into tomorrow. Before we can do that, let's talk about the price action from today. All right, let's go over to the 15-minute chart on the SPY. There was this 442.72 level, which is what we closed at, surprisingly. 442.72 was my key level going into the week. All right. Yesterday morning, Monday at the open, my first trade of the week, I got stopped out on. My first trade of the week was simply, I saw that we had these lows here from last Thursday. At the open, we just about broke them to open up the week, and I got into puts. Now my put stopped out yesterday, right over here at 444.1. Okay, it was just a day trade. This was my day trade. It was not a good day trade. I lost it. I stopped out. Okay. Same thing again today. I saw we were testing the level at the open. This was the second time we were doing so. It made sense to me. You bounced off of it yesterday. Now you're already back at it the next day. That's not strength. That is not strength. The bounce off level and then retest or break down the next day, the likelihood of breaking down is pretty decent. So I got into puts again this morning, right at the open. And then the trade worked out, and I made more profits on the puts today than I lost on my puts yesterday. So Biscuit's bringing me down on the week right now. It's had it down 10% like the last 2 days, but on just simple S&P trades, I'm up because I took the same trade twice and I just made more money the time it worked out. And then I ended up taking profits on my puts like over here today. But then what happened? If I was still at my desk, I probably would have traded it, but I was heading to class. I did share this in premium when it was happening, like literally right when it was breaking out. We got this wedge formed up at around 1 p.m. It broke out. It played out beautifully. Might be like a little bit of a cup and handle look to it. I don't think it really matters because tomorrow's tomorrow. All right. Going into tomorrow morning, here's the setup. You have this kind of cup and handle look to it. Sure, if you get above 443.26, that's probably a level I might take calls at. We'll see in the live trading in the morning. Discord.gg/free trading movement. Anyone will be able to watch that tomorrow for free. This is level. I'm actually just going to keep it on my chart, make it a white line so it stands out. This level over here, okay, it's somewhat equal to these lows from September 7th last Thursday. It's these lows over here, this low over here, and then 3 highs in a row from today. 3 times you topped out at that level, right around the open, and then twice in the afternoon. Above that level, you could probably see a nice rally, whatever. But if we keep rejecting that level, we start breaking down again. Take a look at that. The potential for all of this afternoon rally to be a bear flag, okay? Something like that. And if that starts playing out, FOMC comes into the mix. Think about it. Zoom out over here. What happens in downtrends? You make bear flags, they break down, you go lower. So tomorrow actually, in my opinion, is the first day in a while where we have a lot of juice in both directions for the morning trade. And it's a very simple thing. Unless we gap. If we gap in a large direction, then it kind of ruins it. But flat open, I'm going to wait to see if it can break above this. If it does, I'll probably take calls. If it starts rejecting and breaking down, gets on the VWAP around 441.5, and it's probably going to be different at the open, puts. So that's going to be my game plan for tomorrow morning. We'll be displaying that live in the live trading. It might work, it might not. We will see. That's what's going on in the overall markets ahead of the FOMC. Another small update, that Russell 2000, shout out to Gold Miner who brought this up, he's in the chat right now, did confirm a breakdown of this head and shoulders and the 200-day moving average today. So there could be some more downside for small cap short term. I mean, I'm still bearish on the S&P and the Qs as well. They're under the levels, right? The Qs level is this blue zone over here. The S&P level is 4448, slightly under it. So the bearish side is still my bias, unless we get a 1% move up on the FOMC, then that's a real partial decline in this triangle. You could see more upside. So I know I'm just saying if it goes up, it's going to go up more up. If it goes down, it's going to go more down. But that's pretty much the only thing you can say in these types of consolidations, especially when you're testing breakdowns. But we're very close for a pretty decent bearish formula setting up over here. And the FOMC is just the last piece to it. That's why I really want to put a lot of emphasis on what I'm talking about tonight. Let's talk about some other names in the market. AMC, this is another one on my watch list for tomorrow. Today it got another pretty large bounce right off of $7. Broke out of that supply line. I do have an alert set up. If it is able to get above this zone tomorrow, that mid $8 area, it could go back to retest these highs at 9. So that's an interesting one. Also, I'm still on my Fisker calls. Let's talk about that. It's testing this 630 level. That's very key for tomorrow. I would say overall it's just back testing 200 moving average. Did close slightly below it, but I'm looking and hoping for a reversal tomorrow. You dropped a lot for 2 days. To be fair, it did rally up 30% before dropping 10% in 2 days. And 650 is the important level to reclaim on this one. And if we kind of go over to the 4 hour, it has that potential cup and handle look to it. Delete everything for 1 second. I'm just going to draw it out roughly. Right, it has this potential cup and handle look to it. Setting up, but you need to start bouncing here. So tomorrow is pretty much do or die, technical wise, for Fisker in my opinion. And I will manage my position according to that, my short-term calls. And Tesla's also testing a big level here. It's flipped this high put in the beginning of the month at 260 into a support twice. I want to talk about some names in both directions for FOMC. Let's say we get a nice move in the market to the upside. Tesla is an interesting one on the upside, right? You got 2 bounces here at 266.50. Kind of look at this 1 hour. You got the hidden bullish divergence and a gap to fill at 273. If we get a downside, an interesting name is Nvidia. It's got this ascending broadening wedge. It was an inside day today. Downside day could definitely get it to retest 419-ish, where you've put in some recent bottoms at. So these are 2 names in both directions tomorrow. Tesla to the upside, Nvidia to the downside, depending on what the overall market's doing, that I will be keeping an eye on. I want to go over the swings. We're going to start off with AMD, which is retesting its lows over here for the potential double bottom, but getting back above 103 is key. NEO was the rough one today. It stopped out, and yeah, they did an offering. NEO raises $1 billion in convertible bond deal. This is a part of swing trading. Stuff like this happens. It did not open below the stop, did not gap down below the stop. That's why a stop loss is there. It hit the stop, and that's why the stop loss was here, because you break that level, you go lower. So the technical setup has been broken. It was due to news. There's no excuses. It failed. This was a failed swing trade. It's a part of the game. Couldn't have expected that, but you always have to technically expect the worst, which is why we have stop levels. If you just want an overall update on the technicals right now, the next big level is 745. That's your next level. All right, let's take a look at those energy names. VTNR flagging a little bit after breaking out of the wedge. VLO back testing the breakout of this inverse head and shoulders and phase, up 4% today. Nice little outperformance, bouncing off support. So the shark there, very interesting. And then finally Lucid, alongside Fisker selling off today. It is testing lows. I believe it might have even hit all-time lows today. So the stop is very close. There's no support beneath this. If it doesn't reverse tomorrow on some capitulation, that's another stop. So the swings are not doing too well. We had a really good couple of weeks to end August, first week of September. Last couple of weeks have been rough around the swings. That's why you can see I've stopped really rolling out swings right now, because my stance is shifting towards bearish on the markets. If you are in premium, I did drop a new swing today, and it's not necessarily the typical swing you would see. All right, I'm not going to say which ticker it is, but let's just say they're bonds, right? So it's like an ETF with bonds. So it's kind of in a way, not necessarily an inverse market strategy, but just like a slightly separate market strategy instead of just going long equities. And that was an interesting chart I found. So relaxing a little bit on the swings, and then hopefully this volatility comes back into the market post FOMC, which makes day trading a little bit easier. Last week was not great for me trading in SPY and SPX intraday. So far in the week I'm up doing that, but last week was probably my worst week trading the S&P in like 2 months. So yeah, this is not an easy environment for day trading the markets. overall markets, there are some really good setups on individual names, that's for sure. But I think that now that we're getting this bearish setup, unless the FOMC changes things, which that's completely fine. As a day trader, I don't care if I come on the stream tomorrow night and say, hey, I'm bullish now. What? So what? What are you gonna do? I can be bearish tonight and bullish tomorrow. I can flip-flop. I'm a day trader, right? But then, of course, when you're swing trading, you want a more trendy market. We'll see what happens, all right? In other news, Carvana was down 9% today. Wow, the swing would have been beautiful. I've talked about multiple times. I had a very decent size of calls. I made a couple thousand, maybe a few $1,000s on the calls. Would have been 5 figures if I would have held it up to the final. Like, I literally set up the targets and everything, and I just decided to take profits at my first target. But it actually hit the final target / this resistance level and started reversing pretty heavily. I don't know if this auto strike thing is going to be affecting them. It definitely could. Create issues for the whole entire vehicle market or automobile market as a whole. That definitely might have some relation to what you're seeing on Fisker, Lucid, a lot of the names apart from Tesla as we speak. I mean, NIO did an offering today, so it doesn't really relate to them. And then again, that's in China, it's not in the US. So some interesting headlines. Quick look at Apple heading into the FOMC tomorrow. It's getting a third bottom at 174. It's got this gap to fill above at 181. If we get a nice move on the FOMC, that's something to look out for. Apart from that, nothing too crazy. See if there are any other interesting movers. Intel down 4% today. It's a pretty ugly bearish engulfing candle breaking below that $37 level. A lot of these mid-cap EVs not having a good day at all. Rivian closed down 4%, but it looks like it was down 8 or 9% at one point in the day. And then on the flip side, Pinterest had a pretty good day. And this is a very interesting chart. This is the first time I'm seeing it. But Pinterest, I want to look at Snapchat after this. Take a look at this downsloping channel, bullish engulfing candle to break back above the 200-day moving average. Man, I hope that happens to Fisker. But we will see. With classic bullish divergence on the MACD. Very interesting formation here on Pinterest. Let's go take a look at Snap, somewhat similar name. See what it's looking like. You've also got the potential for classic bullish divergence on this one, and it's getting back down towards the bottom of this range. Might even have a little bit of wedge formation setting up here as well. I don't know. Social media names, pretty interesting. I don't think Meta looks the same. Meta looks the opposite to me. It looks like it's back testing a bearish flag breakdown with hidden bearish divergence. So we will see. All right. Let's take a look at these chats. Kaleidoscope says, are you thinking about an XLE long put? I remember that fire swing from a while back. Probably not. I'm not saying it can't work out. It is out of resistance. But with everything going on in oil and just the fact that longer term it's the ascending wedge. It's been a long day. It's an ascending triangle. It definitely could pull back here. You could maybe break that demand line, which is testing right now. You got classic bearish divergence on both oscillators. The variables short term are bearish. But even on a dip, you could just get some news that comes out and then it could just send you to break out of it. So a little bit too mixed for me to go long puts, but I'm not saying it won't work. Zeke, how's it going? Just watching how FMC affects the market into the end of the week. And then Dustin says, doesn't the video look like a bull flag on the daily to you? It does not. It looks like an ascending broadening wedge on the daily to me. I guess the bull flag approach would be this. But that just doesn't look as developed as the ascending broadening wedge. All right. Quick look at some other stuff. Gold testing the breakout of this falling wedge. Flat day for China right now. Holds down a little bit. And that's pretty much it for right now. Futures relatively flat as per usual. That's been the theme lately. Tomorrow morning around the open, I will be live for everybody in Discord, discord.gg/freetradingmovement. Here and there, I'll do like a public live trading for everyone, not just in premium. And tomorrow's going to be one of those days, maybe once every 2 weeks or something for right now, and then we'll change it over time. But yeah, be in the Discord tomorrow, discord.gg/freetradingmovement. It's at the bottom of your screen, right under me. And Yeah. All right, you'll see me there. What else was I gonna say? Oh yeah, premium sale. Just pin chat. You can get 35% off with code CHAMP is back. All right, get 35% off. A lot of great activity in premium lately, and I'm switching up a little bit. All right, we're getting some different type of swings out. I'm trying to do it a little bit differently, and I think it's been really nice. This September's been a pretty good month in premium, so hopefully keep it up despite the market selling off or just being sideways and boring intraday. So yeah, if you want to join that, now's the time to do it. Sale's going to be limited time only, and there are limited spots. There already are some spots filling up. Had a bunch of new people joining premium in the last couple of days. So right now's the time to do it. There's no market like this market. I'm telling you. Doesn't matter if it goes up or down, it really doesn't. This is a beautiful market setting up in my opinion. I love the lack of volatility right now because you know what's going to come next? Some major volatility. And I can't wait for it. So if you want to be with me, and be with me. Livescope says, Champ, did you just get back from the gym? I did not go to the gym today. I woke up, live traded, went to class, was there all day. Literally just got back 4 minutes before I went live on the stream. So since 9:15 a.m. this morning, it's now 10:47. I've just been nonstop working, and now the gym's closed, so no gym today. But I will go to the gym tomorrow. I'm going to sleep, wake up, and then go to live trading. That's the plan. So yeah. Dustin says, will your YouTube go live in the morning or have to get in Discord? It will be in Discord. It'll be on Discord. And then the recording will be posted to YouTube after I'm done. Can you please explain how SPX and SPY correlate? They're both tracking the S&P 500. The SPX is the literal S&P 500 composite. Okay, it's a little index. Maybe that's probably a better word to use. And then the SPY is the ETF branched off of that. It's roughly about 10 times in share price, 10 times smaller. So in terms of most traders that are retail, SPY is an easier option because both the shares and the options are a lot cheaper. So yeah, there's definitely more in-depth explanations as to how they're tracking the S&P 500. But that's all most traders need to know. But you can just look it up. And there are some, I believe, tax differences between the two of them as well. I mainly have traded the SPY in the past. In the past month or so, I've started trading the SPX options here and there. It's just been a way for me to leverage low volatility and even good volatility. It's just leverage in general. But that always has to be prepared with risk management, of course. When you coming back to Toronto? I had no idea you were here a few months ago. That's really funny. My girlfriend just texted me, I think today, about going back there because we went there together in February. I don't know, it's going to be a very busy rest of the year. Very, very busy. Hopefully next year. But the rest of the year, I don't think I have time to travel anywhere. It's just a lot of back and forth between going to college, going to the stock exchange. I have a bunch of networking events and meetings with a lot of these people that I'm meeting right now. Just moved into the city. There's not a lot of time to do traveling right now, and I've done a lot of traveling in the past year. So I feel like I always want to, but it's also nice to take a break. You don't want to overdo anything in life. I think it's 14 countries I've been to in the last year. I'm sure a lot of you remember there were a couple months here and there where I just wasn't as active. I was traveling and I wasn't even trading. So I've definitely done a very crazy amount of traveling in the last year. So no traveling until next year, most likely, unless I do like a winter trip. And yeah, Zeke says we'll be doing snowboarding soon. That would be very cool. Looking forward to that. All right, so I'm gonna get out of here. Have a great night. See you tomorrow for FOMC. Keep your risk managed and sleep well. Good night.